Hey traders, what's going on? This is Chris from Varillo Trading. Hope you guys are doing good today. In this video, we're going to talk about some of the key differences between demo trading and live trading or trading with real money. So believe it or not, there's actually a number of differences between the two, and I'm sure you've heard traders discuss this topic before in the past. In this video, I'm going to give you some of my thoughts on it, some of my experiences with it in the past in my own trading right now as well, and some things I've heard from other traders, people that I talk with on a daily basis. So in this video, I'm going to try to cover some of the key differences between trading real money and trading a demo account, and some ways where I believe either one falls short depending on what you're trying to do. There also may be some scenarios where traders are forced to trade a demo account because live trading might be illegal in their country and they have to trade one of those funded trader evaluations. I categorize those funded evaluations as pretty much the same as trading a demo account because of the reasons I'm going to discuss to you later in this video. So stick around and let's talk about it. So I'm going to start by giving you guys an analogy here, and this analogy could be related to any professional or competitive activity that exists, including playing music professionally, including playing a professional sport, or basically any kind of competitive activity. I'm going to give the analogy to music because I've been doing music my whole life, so I kind of have a good analogy when it comes to that. So I would say trading a demo account or a simulated account is in a way very similar to the act of practicing your craft. So if you play an instrument, you're going to be practicing things like the theory behind what you're doing and the positioning of your fingers. If you play an instrument, for example, if you're a guitar player, you're going to practice guitar scales and the mechanical side of execution when it comes to actually playing the notes on the guitar. When it comes to trading, you're practicing your order placement, reading the market in real time, how to plan trades, and how to execute them consistently. So you're pretty much practicing and putting together the building blocks of a trading strategy when you're trading a demo account. When I'm practicing my guitar, I'm practicing a certain idea or a concept I might have. However, what you're practicing in a demo environment or on your instrument in your practice room, I believe that it only goes so far to help you in a live trading or a live band musical environment, in the case of the musical analogy I'm giving here. So you can know every guitar scale out there. You can know every cool lick that every awesome guitar player knows how to play. You can know every trading strategy. However, if you do not know under which environments these strategies are meant to be employed in and how to analyze and determine in real time what your strategy selection is going to be and why, then all of what you've practiced in a way could be argued as being useless, because you don't have the discretionary ability in that moment to say, all right, this is what I'm seeing and this is what I'm going to do to adapt to what I'm seeing. This is the first reason as to why I believe demo trading can only take you so far. We're going to explore a lot of different arguments in relationship to this topic, and I'm also going to explain to you why I believe demo trading is very helpful, because it's the equivalent of practicing. This is slightly controversial, and this could be why only a small percentage of people who trade consistently actually make a profit consistently. And it's simply because they don't put enough time and effort and discipline in regards to their practice sessions. And this could be for a number of reasons. So I'm going to give you an example that I've experienced in my life. Okay, so I'll be honest with you guys, I'm really good at music. I'm naturally talented at it to the point where when I was in music school, I already knew the whole course curriculum before I studied it in college. So basically, I grew up in an environment where I was already good at it, and I didn't really need to practice to be good. Let's be honest. If I did practice, it was like basically putting the icing on the cake. And like if I really practiced, then you know shit was gonna hit the fan because I was about to rip your face off. Now, I believe that this is a reason why I experience limited success in my day trading activities, because I think that there might be some kind of a subconscious belief inside of me that I don't need to actually put as much effort into my practicing as I think I do. This could translate over as well to anybody who's been somewhat successful in their life before approaching trading. So take the idea of a very successful and motivated business person, right? They've started a number of companies. Some of them have been very successful. So when they approach trading, they think that they can experience that similar amount of success and not realizing that basically this is the hardest game in the world, and this market doesn't care about how talented you are. It's going to rip your face off no matter what, because it's going to do what it wants to do at the end of the day. So let's continue talking about demo trading and live trading. So like I was previously saying, trading in a demo account is equivalent to practicing an instrument before a concert. I believe it will fall extremely short when it comes to replicating what the live environment is actually going to be like. Your brain and body knows when there's something really on the line here. And when you're clicking the mouse and you're trading fake money, your body is not experiencing the same stress it's going to be going through when there's real money on the line. When the market is making you frustrated because you've scratched 3 in a row trades and maybe you had a loss and a win and you're basically chopping your P&L around all day, that slight buildup of frustration, you're not going to feel that in a demo account. When you trade your demo account, you're way more carefree. You're just going for it. You're carefree and also slightly careless because you're more likely to overtrade because you know that you're practicing anyways. When I pick up my guitar and practice a minor scale, okay, I can run through that minor scale in 6 different positions and I can rip all over the neck in that position. And what I'm doing when I'm doing that is I'm improving my facility on the instrument. Now, put me on stage with a group of guys. If I just start playing an A minor scale and disregarding what everybody else is playing, well, guess what? What I'm doing is not going to be serving the band in a positive way. I'm going to get a dirty look from the drummer and the bass player, and then I'm going to get fired the next day. And the reason is simply because I wasn't playing for the moment of what was happening in that instant. I was not playing something that was adapted to what the bass player, what the drummer was playing, and I certainly was not accompanying the lead singer because I was just in my own world playing what I had previously been practicing before the concert or before the session. The analogy I'm trying to make here relates more to musical improvisation. It doesn't relate to reading music on a page and playing it exactly for what it is, because we all know that the markets are not that way anyways. I'm talking really about musical improvisation and the discretionary aspect involved when you're in a live jamming scenario and you hear a saxophone player play a certain thing and you all of a sudden want to go and accompany him, then play something that complements what he's playing. So that type of discretionary skill, these are the skills that we use when we're trading a live market. Now, some of you might argue against this. Some of you are going to say, listen, I only trade my one setup. I don't use that much discretion when I'm trading the live markets. And again, different traders have different approaches. I'm more on the discretionary side. I like to have, a few tools in my toolbox, about 2 strategies basically, and I will look at the market and I'm going to say, what strategy am I going to trade right now? Is this a more of a mean reverting market, or is this a momentum-based market? How am I going to trade this right now? Okay, so let's go on and talk about some of the body and brain reactions that take place when you're in a live trading environment versus in a demo account. So like I was saying earlier, there's a high degree of stress that's associated with trading real money in real time. And again, it depends on your trading time frame. If you're scalping, you're taking many trades in sequence, and depending on how you're trading and depending on how your session is going, you could easily build up frustration and the fear of missing out and the greed that you missed the last 2 trades and now you want to let this one ride. All of these tendencies that we experience as humans, these natural human things, because greed and fear are totally normal things to experience, all of those feelings are amplified by 10 when you're trading a real account versus trading a demo account. When you're trading a demo account, you don't really care if it went 1 tick past your stop or if it went 1 tick before your limit. All of those things are now insignificant because you're still in a practice environment. Your brain and body knows that you're practicing. Whereas when you're in that live environment, if that thing came 1 tick away from your limit order and you didn't get filled and then it went back to your break even, you're going to be a little bit frustrated. And if you're not going to be honest with yourself in that moment about the natural feeling you had, which was frustration, then this is going to be very hard for you to succeed in. Remember, trading is a process of personal development. You need to feel these things in order to learn how to deal with them better in a real environment. So again, the fear of missing out is going to induce you to chase the market. If you trade more of a passive strategy and you notice your orders haven't been getting filled, there's a little bit of buildup of frustration there. So you end up starting to chase the market because there's a fear of missing out that you might miss your setup. And that leads you to take more aggressive trading entries. And we all know that this never ends well for the majority of us. There are some environments where you need to be aggressive and the market will induce market participants to be more aggressive on certain days and certain times of the day. And now soon after, this condition will change to something completely different, and the traders who are left trying to chase the market are now stuck, and every time they chase it, they're wrong immediately. So there's a number of ways that you can use the market's generated information to tell you if what you're doing is what you should be doing. But sometimes there's also a high degree of randomness and ambiguity in these markets, and that can make things very complicated. Some of you are going to argue that you do take your demo trading very seriously, and I believe you, because like I was just saying earlier, in order to be disciplined in your trading, you need to be disciplined in your practice sessions as well. So you have to be disciplined in your demo trading, and this is something quite hard to do, by the way. However, as disciplined as you are in your practice sessions, I still believe that trading real money, even if you're trading one contract on a micro versus trading a demo account, is not the same thing. Because when you're trading one contract on a micro, you're still putting real hard-earned money at risk. And whether it's hard-earned money or not, you're still putting it at risk. That's money that you made somehow, and you put it at risk. You paid the market to enter that trade, and now if you're wrong, you're gonna lose it. So a lot of people come up with a lot of these ways of thinking about money. And again, I try to avoid thinking about money when I'm trading. That's why I prefer to look at it in points or ticks. But really, when you put it into perspective, let's say a job pays you $20 an hour and you work all day and get paid, and then you take one trade and you're risking $10 a trade. You take two trades and you get stopped out, and those trades happen over the time frame of 5 minutes. Well, basically, you lost an hour's worth of your pay in 5 minutes. That's one way to put it. And that's also one way that traders mess with their own heads when it comes to trading the markets. That's why, guys, trade only with risk capital at all times. Do not trade with money you're not expecting to lose, okay? If you open up a brokerage account with a futures broker and you don't know in the back of your head that you're probably going to lose your money, because the statistic is that 90% of futures day traders will blow through their accounts anywhere between 4 to 7 weeks. And you can ask brokers this question, by the way. What I'm saying, you guys, is just be careful, and you got to know the game you're getting into. The odds are not in your favor, okay? Any way that you can shift them in your favor is going to help, okay? So if anything I'm saying in this video is resonating with you or you find it helpful, let me know down below, guys. Remember to smash the like button. It helps a lot with the channel. As I previously discussed to you before with my experience with music in the past, there is a subconscious part of me that is lazy to practice, and this is something I'm trying to work on. So lately, I've been going back and forth between the demo account because I've been testing out a new sort of method, and I believe that when you're testing a new method, well, if you start only trading your live money on it, well, you're going to realize that you're going to slowly start blowing your account on it. And again, there's nothing wrong with that because you're trading only with risk capital, right? However, that money doesn't necessarily need to be lost as fast as you lost it, because you know that you didn't actually even put in the time to practice the method before you put it on your live account, okay? So there is a high degree of discipline that's required when it comes to trading a demo account. What I can say is the main takeaway from this video is that demo trading is very important, but the majority of traders don't know how to do it properly and what purpose it serves. I like to think of it as the same thing as a disciplined practice session, and it's no more or no less than that. When you know what you have to do, it's very important to get out of that practice environment regularly, okay? Brokers are gonna love me for saying this, but do not spend all your time in the demo account. If you have something that is working, if you are experiencing some success, may it be even slightly limited success, if you have confidence in your execution, then go trade micros, go trade small is what I'm saying. When you trade that small size, you're going to learn a lot about how you react to the live market in that real-time environment, and you're gonna all of a sudden start feeling those emotions, the fear and the greed, the mistakes you're gonna make in your trade management that are gonna be normally fueled by these emotions that you don't even know are working in the background, okay? So guys, trade small, trade at risk capital, and take care, and I'll see you in the next video. Hope this helped you. Take care. Bye.